Hello guys, welcome to Basic Trade. Today we are going to do a breakdown on GBPUSD, which is one of my favorite pairs, and also we are going to go deep into a weekly analysis, how we are going to approach the week. So this is what I have. I got my first entry, that was Tuesday, and then I took a loss, that was Thursday, and then I took a win, that was Friday. So I'll give you every reason behind this trade. So we are going to start from the higher time frame to understand what is happening on the higher time frame. On my last video, which was the weekly outlook, I told you guys that GBPUSD was bearish, so that is the reason why I was selling. But on Friday I saw something different, which made me to buy GBPUSD. So on the daily time frame, you can see on the daily time frame, since I was bearish on the weekly time frame, I was waiting for price to reject on a daily key level, and if I have a break of structure to the downside, I will know, okay, maybe a pullback has ended and now we are going for an expansion to the downside, maybe to take out this low right down here, So after they rejected this key level, close below this key level, I went to the 4 hours time frame. On the 4 hours time frame, there was no break. I went to the 1 hours time frame. On the 1 hours time frame, I had a break of structure on the 1 hours time frame. Now my bias for sell was confirmed. I had a sell bias to the downside. Now for me to mark out my valid key levels to sell to the downside, I need to mark out a higher time frame key level, and I'm going to define that key level on the lower time frame into a structure. This is all I need. I need to define this key level into a structure. On the 4 hours time frame, I saw this OCL. I saw this OCL, which was fresh. I saw this OCL, which was fresh, and I refined this. I need to refine this into a structure and into a fresh key level. On the 2 hours time frame, this OCL was mitigated on the 2 hours time frame. What I did was I refined into this OCL right here, and I went to the 1 hours time frame. On the 1 hours time frame, this made a lot of sense on the 1 hours time. On the 1 hours time frame, we had a break of structure and we had a liquidity, which is one of my structures. I trade pure structure. I need to see a structure. I need to see a liquidity. I need to see a fresh point of interest, and also a fair value gap is an added advantage. So on the 30 minutes time frame, this was more clean. I had a break of structure, I had a liquidity, and then I had a nice point of interest right here, and my first sell came from here, which gave me I always go for 1 I close my profit around 1:4. I always go for 1:4. I don't do more than that. I go for 1:4. No matter how juicy the setup is, I always go for 1:4. And on the next sell, which was a loss, I'll also break down the loss and the reason why that happened. I was trying to trade the continuation to the downside, which I saw this key level right here, this OCL key level, and I needed to refine this into a structure, which I saw on the 2 hours. This was a fresh OCL. On the 1 hours time frame, the key level was still fresh on the 1 hours time frame, and I need to go at least to the 30 minutes or the 50 minutes. Now I went to the 30 minutes. I saw this. This is what I refined to here. I refined to this, and this was very valid because we tested this level multiple times, first time, second time, and then third time, which means this key level was a valid key level. That is why after price broke that key level, price immediately mitigated that key level, because this was a valid key level for price to buy from. Now this was where my entry came from. Why? Because I have a break of structure. I have a break of structure here, and then price engineered liquidity after this liquidity, price also engineered another liquidity right here, and my point of interest was very fresh, and price took me out. That was Thursday. Price took me out. That was Thursday, minus 1%. Now the reason why this I encountered these losses was because if you can look the daily time frame, if you can look at the daily time frame, this is what happened on the daily time frame. Price was trying to do a pullback, because whenever price take out a previous candle, always expect a reversal or a pullback. Since we are bearish, this is trying to either do a pullback or come for more liquidity, to take out this low, or maybe tap into this key level before we can start selling to the downside. Now I saw this, that is why I took the buy, because my sell was very valid. But after I saw this, I knew it's either we are doing a pullback or price is going to come for more liquidity, or price can still come here, because you can see on the daily we had a closure right here, price close right here. If you can go to the line chart, price close right here. So this made a lot of sense that we might be coming for a pullback before we can start selling to the downside. Now what happened? That Thursday candle gave a CRT, which is one of my buyers. Price took out this low. Whenever you see this, always expect either a reversal or a pullback, if only you understand your higher time frame direction. That is why I always insist on direction. Now after price took out this low, we had a break of structure on the lower time frame. That was the 1 hour time frame. On the 1 hour time frame, price closed above this key level right here. Price closed above this key level right here. You can see this is the before, and you can see this is the after. Now after we had a break, I was bullish, which was a short-term direction, because price can still come here, take out this liquidity and start selling to the downside, until I'll see a daily rejecting a daily before I can confirm the sell is in control. So for now, I am going to be buying on O. I wait patiently for Monday to see what Monday will do before I can start looking for sales to the downside. Or price can still come and take out these highs before, maybe these internal liquidities before selling to the downside. Maybe price wanted to engineer more traps to take out more stop loss before selling to the downside. But trade what you see, not what you feel. So now on the 4 hours time frame, after I confirm my bias, you must confirm your bias before you look for any structure. You cannot look for a structure if you don't have a bias. Now on the 4 hours time frame, I saw this continuation setup, this OCL right here. After I saw this OCL key level on the 4 hours time frame, I will not just trade blindly. And since this was a pullback, I need to be very cautious. I need to wait for either a confirmation before I can take this trade. I will not just take this trade blindly, because this is a pullback, because I am not sure about the direction, because the higher time frame direction is bearish. So every pullback I am going to trade, I am going to be cautious. I am going to trade with caution. So now on the 1 hour time frame, you see that key level was still fresh, but I had to refine to this key level right down here. Because we had a sweep right down here, and we had a break. Right now I have a break of structure, and on the 30 minutes time frame I saw my liquidity, which is what I want to see. If there's no fair value gap, no problem, but I just want to see a break of structure, a liquidity, a fresh point of interest, and then I can take my trade. So now after price tap into this key level, I need to wait for a confirmation, because I do not trust this pullback. I do not trust the pullback. So on the 15 minutes time frame, I had a break of structure. After price tap into the key level, price broke structure. After price broke structure, I never wanted to miss this trade, so I wanted to enter directly from this breakout block. I wanted to enter directly from this breakout block, so I never wanted to miss the trade, so I had to enter from here, and I wanted to go just for 4%, which I normally do. 4%. I don't go beyond that. And also we had a trade on gold, which we had this sell trade which I did not take. I had this sell trade which I did not take, this sell trade, because this was during the Asian session open, which I did not take. I don't trade Asian session. But if you can see this buy, I will explain this buy. Let me explain this buy. On the daily time frame, you can see we had a rejection right here on the daily time frame. We had a rejection here on the daily time frame, and we also took out previous low. After price tap into that key level, took out previous low. Like I said, whenever you have something like this, know you are expecting a reversal or a pullback. I knew something was coming, and after it rejected, I need to look for a break on the lower time frame. On the 4 hours time frame, we had a break of structure on gold. We broke structure right here. After we broke structure, I was waiting for price to either come to this QM. This QM was mitigated, so I was waiting for price to either come here before I can buy, but unfortunately price did not. So the next day, was Friday, I saw this key level right here, this OCL right here, which was during the New York session, which that is price and time. And I always look for this during active session, like London session, New York session. Right, so after I saw this OCL key level, I needed to refine this key level into a structure. You can see, if you look at my setup there, the setup I took this week, they look familiar, they look the same, right? I did not change anything. I just need to look for a key level, and I'm going to refine this key level into a structure. Now on the 1 hour time frame, you can see that key level is still fresh, but I need to see something. I need to see a clear break of structure and a liquidity. On the 30 minutes time frame, we had that. We had a break, a sweep of liquidity right here. We had a sweep of liquidity right here. We had a break of structure right here, and then we had liquidity right here, and we had a fair value gap, which is an A setup for me. This is an A setup for me. On the 15 minutes time frame, it's looked more clearer. You can see we had a break of structure, we had a structural liquidity, and we had a nice fresh key level with a fair value gap. This made more sense, and I go for my normal 1:4, which that happened. So this is what I took for the week. Like I said, always make sure you pay attention to your direction. If you understand direction, understand when the pullback is coming and when a reversal is coming, or when you are trading in line with the direction, you will always be safe. I'm just going to analyze just gold for the week. I'm going to analyze just gold for the week, not to make this video long. And we are going to start from the week. Now, looking at the weekly time frame, I'll just delete everything. Looking at the weekly time frame, we just took out this previous low on the weekly time frame, and normally weekly close below this key level right here, which means we had a break of structure, and weekly rejected from here and also broke structure to tell us that okay, gold is bearish. But you need to understand something. There's a lot of fair value gap right here that we need to fill, right? So this reversal might be, because whenever you have a sweep like this, always experience a pullback. You always experience a pullback. So this might be a pullback which we don't know. All you can do is trade and mark out your higher time frame key level like a weekly. And when price is approaching this key level, you wait patiently to see what price will do. If price gives you a break of structure on the daily or on the 4 hours time frame, then you can go in line with the weekly direction, which is the bearish direction. Now the pullback has started. We check. This is what will always happen. Price will always move from external, or anytime price take out an external liquidity, price is coming in for an internal liquidity, which is a pullback. This will always happen for pullback, then before you can continue into the right direction. Price will come from external to internal, from internal to external. Whenever price take out an internal liquidity, price is coming for the external. Always note that. So after price to cut this low, we are expecting price to either come for this weekly key level, because price also move from weekly key levels to weekly key levels. So after price to cut this low, we can go to the 4 hours time frame. There is no break on the 4 hours time frame. So what I can do is, let's check the 4 hours time frame. On 4 hours time frame, we have a break, right? We have a break. So now, whenever price take out this internal liquidity, because look at the structure, the weekly is bearish. You see, the weekly is bearish. So price might take out this low, then tap into any daily key level, like this QM right here, like this QM right here. Once price take out this QM, give you a break of structure, reject this key level, give you a break of structure on the 4 hours time frame. If you have something like this, then you can go for the sell. But if you keep having rejections to the offside, then you can now know maybe price is coming for these key levels right here, these key levels. Always wait for price to give you that confirmation before you can start selling. If you don't get the confirmation, focus on the buy. Maybe we have a long-term pullback, which might happen, but I'm expecting price to give us a reaction at this QM right here, because this is a valid QM. We have weekly rejecting a weekly rejecting weekly, and on the daily time frame we have the break of structure to the downside, and we have internal liquidity, which price is coming for. After price will take out this liquidity, if we have a break of structure to the downside, then I can start looking for sales to the downside. If not, I will wait and see what price will do. Check what you see, not what you feel. So if you love this video, make sure you like, share and subscribe for more tips like this.